The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6644. 6844, 927-6844. I posted the chart of the Dow Jones Industrial Average on the intraday 30-minute chart to start the show. And then the next chart that I posted was the chart of the banking index. And what I did was I also put the S&P 500 overlaid on the chart so you can see the difference between what really has happened, in the market. So let me repeat the number if you have any questions on calling in, 877-927-6848. That is the correct number. I'm working off of my laptop today in holiday mode, so if I make a few mistakes, you have to bear with me. The main thing that I'm watching on this banking index is that we've hit that 382 level twice now, going back several years ago. We took out the 382 of 2010 by just a little bit. It doesn't look very bullish. There's a huge divergence between the banking index and the S&P, and the banking index is getting a whole lot of financial press in here. I think it's at the wrong time, but that's my opinion. Regarding Cyprus, I think that's pretty much a done deal now. Whatever they decide to do, there's probably going to be some rioting in the streets, I would imagine, but they're expecting that, so it shouldn't last more than a few days. But you just never know. The question is if there's any contagion and whether it spreads, anywhere. I believe the market's in a real fragile case here. Basil was talking about the VIX index moving up and down quite a bit, and that's what it's supposed to do, when you have fear and greed. But there's virtually very little fear out there, considering, that this little country caused so much, problems. The markets have held up, relatively well. And if this was their test to see what would happen if they did something like that, then their test certainly passed, and we'll see what the next little thing that they're going to use to make everybody excited. So that's the main thing that I wanted to look at. There's going to be there's something really big happening in the markets right now, folks, and that is we're going to cover that in a second. But I wanted to go into the market for the emerging markets. Excuse me, I'm grasping for words here. I wanted to do the emerging markets, and then I also wanted to do the markets for. I hope I can get this done right. Just a second here. If I wanted to do the Chinese market too, to show you that there's really they're not having any bull markets anywhere in the world. In Asia. Or the emerging markets, which are the things that have led us up quite a bit. So we have a very, a lot of bearish things happening. The most bearish thing, in my opinion, is the fact that we have such pattern completions in the New York Stock Exchange Index and everything else. And so that's the main thing that I'm really watching. But I've covered that so many times. I will just briefly, do that. And then at the end of the show, I want to show that pattern again, because it's a long-term weekly pattern that we've seen, many, many times, and we have to be able to, really respect it. That's my opinion, of course, but that's what we're looking at. The Chinese market is, continuing. It's had not even a bounce here with the rest of the world, going straight up here over the past few months, and it's had a very high correlation up until the beginning of the year, and that's when the market really had a big divergence. That was starting at about the end of December, and you can see that the S&P 500 has gone, up to make a three-drive pattern. and the Chinese market, just literally gets hammered all the time. And in fact, over the last 5 or 6 days, it's gone absolutely nowhere. I mean, it's just, just done absolutely nothing. So this is, I think this is part of the overall economy that I'm looking at just by watching the charts. I'm not an economist, I don't follow the GDP or any of these things. I'm just looking at the charts, and that's what it's telling me. I've been cautioning people for several months now on this. This is not like 99 and 2000. The basic market has really gone nowhere. If you look at the broad market, which is the New York Stock Exchange Index, it has held up, by the 786 retracement, extremely well, and has not broken through there. I said in my newsletter this week, if the Dow's up, above around 15,000 this week, then I'll have to review everything that I'm looking at and assume that, we're in a 1999, 2000 type environment. But the rest of the world is not, trying to, see this. That's the main thing that we're looking at. So this is what we're trying to do here, and we'll see if it can, be accomplished in the next few weeks, and the market does start down. The Treasury bond market just about made the price objective of 145 today. I would really like to see that get up to the 147 level, but later on that will be, that'll be the area that I'd really like to be shorting the bonds. Will be 147 to 149. I think that's going to be the big surprise, that interest rates are going to go higher and not lower. We've mentioned this on the show many times, and we posted many charts, showing that this is what, is actually occurring, that rates in the market are starting to go higher a little bit. They haven't hit the mortgage markets yet, but, Bernanke can only do certain things. He can keep rates down, artificially, which he's been doing for the last several years using these programs, but there's a come point where the market takes over, and that's where the real problem is going to lie, is how he's going to unwind, this predicament that we're in of keeping rates artificially low. It would have been nice if they would have reduced interest rates on the credit cards by 5 or 6%, which would certainly be nice. But what would really be good is that if we could drop, mortgage rates for the people that already have their mortgages, and also drop interest rates on people, because many people are still paying, 20, 25% for their, for their credit. And I know some of them are bad credit risk, but even if they drop at 20%, that would be a huge help in the economy, in my opinion. That's what I would be, that's what I would be doing. But I'm not the Fed chairman, so I can't do any of these things. The big thing that's happening in the markets today, folks, is the U.S. dollar. That's the real key. We have moved above that 83.13 level in the U.S. dollar, and I want to bring that up next because this will be a lead-in to what we're going to be talking about on the second half of the show here, and we'll take a look at that here in just a second. And if you're, give me a second here. I will, there we go. I think I can get the chart into the chat room now correctly, and then we can get it moving the right way. Let me see if I can get this chart working here. I hope that the chart posted right. I'm on my laptop, folks, so if any complaints, you're going to have to complain to me, because I don't walk and chew gum at the same time when it comes to technical analysis, so I hope that the charts are hitting okay. Anyway, this is showing you that we've broken above that 786, and this is really interesting what's happening now, because this is sometimes is where we have some pretty good rallies starting, but the key is if we close really strong today above 83.65 in the dollar index. The key here is during the last 3 days is that we did not even make a 382 retracement. We missed it by about 6 or 7 pips in the U.S. dollar index. And That's when the S&P or the euro got to the 130.50 area that we posted in the show the other day, and that's the key that we were looking at. But we're at a really key level in the euro. Remember, the dollar index is 53% of the euro. That's the most important part to remember. Now, what I'm going to do now is I'm going to show you the euro and what it's doing, and that's what I think, and this is what I watch, because this is the biggest flow of money that we've been, focusing on for quite some time. And I will get in here, and I will. I'm sorry, my laughter is because the people at TFNN are trying to get me to do something, and you can't get an Italian to walk and chew gum at the same time, and that's what they're trying to do, and it's not going to work. Anyway, the thing that I would like to do is, hopefully we'll get the thing. I'm going to try to post it a little differently. Maybe this will work better, and then that'll help me get through the show without too much trouble, because I enjoyed the show quite a bit. Anyway, what I want to show you is if you've got the chart for the euro in the Tiger Den and also on TFNN's show, you'll be able to see, Tiger TV, you'll be able to see that we made a huge three-drive to a pattern going over the last 5 or 6 weeks. We broke below the 786 when we went below the 129 level. We alerted you to that, and then we had the nice rally that went up to 130.50, and now what we've done is made that last third leg. That's the equivalent of the dollar index going above the 83.13 level. The dollar index has that same AB equals CD pattern present there. So the real key today is the strength in the U.S. dollar or the weakness in the euro, because if the euro goes below 127.5, that would really signify that we could start accelerating, downward. It's very, very oversold, but on a short-term basis, it is beginning, to show that it wants to has a potential to rally here just because of this three-drive pattern. I know the stuff will be coming out of Cyprus tonight sometime when they finally open the banks, but put yourself in you're in the shoes of someone from Cyprus that works for a living, owns a bakery or whatever, drives a taxi, works as a maid or whatever, teacher, and your money is in the bank, and you've heard all about this stuff. I mean, what are you going to do? I would be standing in line to get as much of my money out of there as I could, whether it's in euros or shekels or whatever they're going to allow them to have. But this is not a good thing. It does not make banking trust. What has happened is not a good thing. If you have any questions, it's 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a call from Joe in Colorado. Are you there, Joe?
Yes, sir.
No, not sir. Just plain old Larry. What can I do for you, my friend?
The other day in your interview with Arch Crawford, you mentioned that the 27th, today, had significance to the Mayan calendar, and I was wondering what that was, because I don't think you ever mentioned what it was the other day.
That came from Arch, Joe,
yes.
So I really don't know. Arch is my neighbor here in Tucson, and unfortunately I'm out of Tucson for the spring break, and I won't be able, well, I could probably call him, but he has so many dates that he looks at, I really don't know. Arch is incredibly well-read, and he does a lot of metaphysical work. I'm talking about, pyramid energy and just incredible amount of stuff that he does. I don't do that. I'm basically, I just look at patterns and ratios and stuff like that. But what I will do is I'll give Arch a call a little later today or tomorrow and try to find the answer to that question and have it for you tomorrow if you happen to be listening on the show. But right now, I can't give you that answer.
Okay. And I enjoy your show, and I always enjoy the interviews with Arch. He is an amazing individual, without a doubt.
He is. We're only 3 months apart, and he was born on April the 17th, and the same year I was, and I was born on July 28th, and we always celebrate our birthdays together. But he's really fun to be around. He's just as he's from North Carolina, and he's just a fun fellow to be with. He's very humble, and the fun part is when he starts to quote Shakespeare. He can quote every verse all of Shakespeare's works. I mean, it's just really amazing.
Wow,
and he does it. Yeah. He does it in a way that is comical. You know, that if you'll be saying something, then he'll quote something about Shakespeare about the subject that you're talking about. And it's really quite good.
That's great. Well, thank you very much, and I'll look forward to hearing from you.
Okay, we actually, when we were talking about the Mayans, we went down there, I think it was 88. Yeah, it was 1988. And during the autumn equinox, that's on September the 21st, the pyramid at Chichen Itza that you've seen, you know, lots of times in pictures and stuff. Yeah. But when the sun is directly above the pyramid at Chichen Itza on September the 21st of every year, the angles of the pyramid form right triangles, and as the sun moves from east to west, it looks like a snake moving down the pyramid as the triangles change. It's really a spectacular thing to see how accurate it is, and it does this every year. Now, of course, if there's cloud cover, which once in a while there is down there, you don't get to see it. But when it's sunny, it's really a spectacular event. So we go down there, and there's probably 250,000 people, I think they were expecting, and they had a total of 10 Andy Gump outdoor toilets for 250,000 people. I mean, that was the funny part of the whole trip because there were so many people waiting in line, and it's in the middle of a jungle. Boy, believe me, it's way out there. So it's not an easy trip, but it was really something from.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, folks, we're still talking about the currencies, and I posted into Tiger TV the Australian dollar versus the U.S. dollar. That's also one of the better cross rates for trading. It's one of the what I call the big five in the Forex markets: the euro, the yen, the pound, Australian dollar, Japanese yen. Those are the really big ones. And it hit the 786 yesterday and has backed off about $1,000. And it did hit the same level that we're looking at in the euro, but it did it earlier. So it's a real critical day here in the currencies, because if the dollar gets really strong, and I'm talking if the dollar index gets above the 83.60 level, then this euro could really, really melt down. But until that happens, nothing has really changed very much. Now, the next one I would like to talk about is, of course, the gold and the silver. And the reason why is because the silver has been lagging the market. I posted into Tiger TV the gold and silver chart going back over the last month, and as you can see, the silver has been lagging, badly for quite some time, and that's been, a real problem. And because this was really a scare, silver would be moving up, quite a bit, and in fact, it's not really doing that. So that doesn't mean that it can't pick up and, catch up and, retain its glory. But right now it's been lagging, quite a bit from what it has done, previously. Hasn't broken down much, which is really good. It held the 786 in silver at that 28.20 level pretty nicely, and, which is good. And gold could hardly back off at all. It could only get down to the level that we talked about, earlier in the week, down to that 1590 level. I think the low is 1585, and then it's rallied a little bit. But these markets are just really they don't have the conviction behind themselves. We don't have a sponsor. Usually, when these things go, they go very, very fast, and we're not having that. Basil mentioned on his show, that the fact that gold could easily, move $15 or $20 or $30 and get the interest back in the gold market, but we need it to get above that 1630 level. That's about $25 from where it's trading right now, and that's when, you'd start to get a lot more interest, in the gold, from the long side to more other people, because we've been in this trading range for so long that it hasn't really moved very much. The thing that I'm concerned about is the fact that silver is lagging so badly. And if you remember the reverse, when we were looking back, 2 years ago, April, when silver was, making $49 an ounce, and everybody said it was going to 100 and 150, and interest rates, the open interest was dropping. Remember, we did that and said, look, open interest is dropping. That means there's no new buyers coming into the market. That means that there's going to be difficulty. So once these people cover their shorts, the market only has one place to go, and that's to the downside. Well, what we have going on now is we have a lack of interest. The open interest in gold and silver is not doing anything. I mean, it's just, it's like no one really cares. Maybe they don't. I don't know. Maybe that's the real key. We'll have to wait and see. But if we were to get a really big pop in volume to the upside with a big increase in open interest, that means that the corral doors are open and the horses are running. So until that happens, I don't think we're going to see a big breakout, because we certainly had wonderful news for gold with a possible collapse of the market of in the euro, but nobody ran to gold. There's a little sign that I keep on my refrigerator that I have from 40 years ago, and it says, "The man who owns the gold makes the rules." And I don't know if it's an old Greek adage or what, but if you've got real gold in your hand, you've got real money. You can't dilute it like they can in Zimbabwe and what we've done with the U.S. dollar. So we'll see what happens with gold. But gold and silver are acting very poorly given all the bullish news. The old adage is if bullish news does not make a market go higher, it only has one place to go, and that's to the downside. That's true on the upside too. If you've got all the bearish news out of the way, and everybody is really hammering it, then the market will turn around and go the other way. So this is why I'm a technician and not a fundamentalist. I could never count all the coins and all the beans and all the other stuff. So that's my main premise of doing what I do. I'm a pattern recognition swing trader, no more, no less. I don't profess to know anything about economics, even though I have a degree in it. I let that degree go about 40 years ago when I realized it really didn't make me any money. What makes me money is ABCD 618, 786, 127, and 1.618. That's all I need to know is what's the market doing, based on these numbers, and that's what I really try to focus on. We're having a lot of weakness in all of the futures markets. Some of them have bounced a little bit, but we've had we haven't seen anything where we're going to have an inflationary blow-off as of yet. That doesn't mean that we can't. Now, tomorrow is a real critical day. We had the full moon yesterday, of course, which was based on the cycle. But the real key here is the crop planting intentions that are going to be coming out here tomorrow. And I'm hoping to have Rich Anderson on the show so he can go over the report with us. It's a very busy day for Rich because he does a lot of hedging and he does a lot of flat speculation, so he might not be able to come on the show at that time, but I will get all the numbers and see if they're bullish. What the planners are doing tomorrow, the report comes out anyway, is that how much they're going to plant. And those of you that have seen the movie Trading Places, that's where that whole thing came from, is that they got the crop report for orange juice early. By the way, if you're ever in Philadelphia, great place to visit because that's where my grandson lives. And also, we got a new baby coming in 144 more days. But the bank there, the Wells Fargo Bank, is where they filmed the Duke and Duke. That was the Duke and Duke office. And I was there last August. And the manager of the bank, because I really was interested in the bank, took me up to the office where they filmed the scene where Eddie Murphy was hiding the drugs. And it was really, really cool. But it's an incredible bank. It was built in 1930. And it still looks as good then as it did. It looks as good today as it did then. So that's it. It's the bank on Broad Street. I believe it's about 200 South Broad Street, just down from the courthouse is where it is. It's really quite a cool place. So anyway, that's just 6 of one, 10 of the other, whatever it is. Okay, I'm on vacation mode, folks. So don't hold me to a state of the art Oscar performance today because I'm really enjoying myself, and that's always a good thing to do. Now, the next thing that I wanted to talk about was the what I think is the most important chart that I've worked on, and this goes along with the U.S. dollar and all these others because they're all interrelated, and that is the long-term chart on the New York Stock Exchange Index. This chart is goes back for about 18 months, but we're going to put one up that goes back even longer than that. We're going to do the weekly and show you the difference between what's really happening in the market and what they're really trying to tell us, what's happening. By the way, my grandson is doing well. He recovered well from his episode in the hospital, and it was partly due because there were other children in the day school where he goes that had the same thing, so it was a little virus that was going around. But that's the main thing. The real key here, folks, is the New York Stock Exchange Index is the fact that it's the broadest market of all. I mean, the Dow Jones is only 30 stocks. They're price-weighted. The S&P is only 500 stocks. They're cap-weighted. The NASDAQ is cap-weighted. But the New York Stock Exchange Index is cap-weighted, but it's 6,700 issues, and it's of all the major stocks in the world. And if you look at this, we're at the 786 of the 2007 high. Even though the Dow Jones has made a new high and the S&P has come very, very close, we have not taken out that high yet. And this pattern that is formed, this three-drive pattern that's in the Dow Jones, it's in the New York Stock Exchange Index, the NASDAQ is only making a head and shoulders pattern. It still has not broken out of that pattern that we've posted many times in the newsletter and also on the programs here. It has not broken, those particular patterns. That's why I said in the newsletter, if the Dow gets above, 15,000 this week, all these patterns are going to mean that, things are just not working, and we're going to have a market, much like 1999 and 2000. But I just don't see that happening. It's a different type of environment. Now, what we had in 1999 and 2000 was a once-in-a-generation, once-in-a-lifetime thing. I will certainly never see anything like that again. But, some of your younger folks probably will. But, that's not going to happen this time. That doesn't mean this market can't go higher. I try nibbling at it all the time. And, sometimes you take a few bites out of it. But the major trend is not turned as yet. And I still believe that the real problem is in the bond market. And I believe that, once that interest rate starts to move to the downside, then you're going to be looking at something that is going to be real sinister, because the bond market is many times, larger than the stock market. And the currency markets are hundreds or thousands of times, bigger than the stock market. So we have to be able to, understand that this is what we are, this is what we're looking at when we're looking at these. What we're looking at when we're looking at these markets and where money is flowing. Right now, the key, in my opinion, for today is how this U.S. dollar index is going to hold up. If the U.S. dollar index can, charge ahead above that 80-60 level, and the euro goes below the 127 level, then that's telling you you're going to have a meltdown in some of these things, and that's going to be a very, very critical time, for looking at this. Someone asked me a question about Apple. We posted the chart the other day that, showed the equal moves in Apple. That ended at the 469 level. And, Apple didn't get above 469. Now it's selling off a little bit. So it just completed the exact same type of move that had happened, just a few weeks ago. So it's just showing that the repetition, was there again. And now we're in the back off pay, correcting again, and we'll see if it can hold the bottom. I still believe that Apple still has a real chance of going to the 395 level. That's not very far. It's only about $60 away, which in Apple, that's really not very much because it moves around, quite a bit. So that's what I think will happen in Apple. I hope that answers the question that we brought up. I don't see any difference than what we had. In fact, I could very easily. In fact, I'll do that right now. Is I will post the Apple chart and we can see it together. This is what we were looking at, and it was very did exactly what it was supposed to do the last time of what it did, and it's nothing is any different. I mean, it had the same rally that we had. Back in February, it did the same thing. It rallied just about $50 an ounce, $50 a share, and that's exactly what it did this time. It rallied exactly $50 a share, right at the 469, which happened to be the exact 786 retracement of the move that we had in February. So that's all it was. It was just doing the same thing that it does over and over again. That's all these markets ever do, folks. They just keep repeating over and over again. What you try to do in order to get an edge is to find that repetition. You know, Steve Rhodes talks about it all the time. Basil does the same thing with the way he measures his counts, his wave counts. Is doing the same thing. He's measuring, similar moves because the market never changes. It either goes up, down, or sideways. Sometimes it'll do the same thing 3 times in one day, but that's pretty much, what it's doing. It's really quite amazing how it repeats over and over again. I love to see the repetition because it is really, quite amazing to me to see the how it really works. Someone asked a question when I thought gold was going to go up, when it was going to break out. I don't know when it's going to break out, and then we'll see if it's really going to, forming to see what's happening. Now today, someone asked a question about the E-mini. I posted when the show started. We got to take a little break here, and then we'll look at the intraday move in the S&P. Okay, 877-927-6648.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've reposted the chart that I started the show with today, and that was the Dow Jones E-mini. It's the same as the S&P. They're running tick for tick. And as you can see, we've had a couple of sharp moves down since the 19th, the 21st, and the 25th. We had a little sell-off today that stopped exactly at the 61% retracement, and that's pretty much what we've done. And today we've rallied up to exactly the 61% retracement, and that should be it for the day if this is in fact getting ready to turn. That's the thing that I'm watching. Very, very vividly or closely right now, I might say. And also the other one that is really critical that has happened, since we had our show yesterday, we had a big move in the crude oil contract. We hit the exact 786 up here. And we're testing it again at the 76.50 level. This is going to be a real interesting test here in crude oil. I know that's a commodity, but it affects everybody. We're going to cover that tomorrow because we've got a lot of things happening in the commodity markets tomorrow because of the crop report that comes out on all the grains. It's going to be really interesting because they do affect things for quite some time. And the moves will be tremendous in both ways. I mean, up and down. So. Even when the market breaks, if the market's bullish and if it has a bearish report, it'll be a buying opportunity. That's usually how it works. And if it's bearish and has a rally, it'll be a selling opportunity. That's pretty much, how it operates. We're at a real critical level in the Treasury bonds. I wanted to, talk about those a little bit before we have to end the show because it goes so fast that it's really quite amazing. How these numbers hit, but we were, watching the movement of the bonds, and if I can just get this thing to set up right, hold on one second. I wanted to post this chart of Treasury bonds because it shows that today's high, we took out the highs that we made, in February by just a tick or two, and that was at the 1.618 expansion. And so in order for the bonds to get moving, we need to get them above the 145 level. Now, if we can get the bonds up to that 148, 149 level, that's going to be, to me, what I think is a big Christmas present because, if we can get one more flight to quality type thing, it would really be an ideal situation for, selling bonds. In fact, is the TBT, which is the ETF for the bonds, tracks it very nicely. It's one of the few ETFs that work pretty good. So we'll be watching that one, really, really closely. But the key today is the U.S. dollar. And that's it. We want to watch it at 83.50. If it gets above that, we got troubles in the euro. 87, whoops, we're ending the show. Live every day in an attitude of gratitude, and may God bless each and every one of you.